Hello, Anthony.
Hello, Claudia.
We're here to talk about IRS Form 5472. It's information return of a 25% foreign-owned U.S. corporation or a foreign corporation engaged in a U.S. trade or business.
Okay, that's a lot to say.
Yes.
And also, we're going to talk at the end how that's not even true necessarily.
Oh, true.
Right.
Yes.
There's your title, right? We didn't lose you there. Foreign-owned U.S. corporation, foreign corporation engaged in U.S. trade or business. The form itself is a liar because there's a new regulation that sort of changes or adds on to that.
Wow. Okay.
Yeah.
So who must fill it out? A 25% foreign-owned U.S. corporation or a foreign corporation engaged in a trade or business within the U.S.
Yep.
And we're going to add to this in a minute.
Yes.
Who must fill it out?
Yeah, there's a secret one there, right?
Yeah.
Big consequences.
So a separate Form 5472 is filed for each foreign or domestic related party. So if there's two or more foreign shareholders who each own 25% or more, then they each have to fill out a Form 5472.
Or is that really the case? Because with the 5471, we're allowed to prepare one and reference an attachment or reference the one that was prepared. So only one needs to be prepared. Likely one needs to be filed, but every time they need to be referenced. And usually the safest thing to do is reference it by including it with your return.
Gotcha.
And usually that return is typically going to be is that you could have a U.S. corporation that has a 1120 obligation that has a 5472 as well because it has the foreign ownership.
Okay.
Or if it's an individual, and this is really going to come up a lot because it's brand new, they'll have a 1040 NR, non-resident tax return. Someone overseas who lives overseas and has an interest in the U.S., it's their 1040 NR is what they have to file that they have to also deal with the IRS.
Yep. Now, an issue that we see sometimes is if somebody's a silent partner. They think, well, I'm just a silent partner. I don't need to fill this out. No, you do, silent or not.
Yeah.
It doesn't matter what your role is.
Yeah.
If you're 25% or more, you're required to.
Now, a question for you. Is this the Form 5472? Is this one of those areas the IRS is looking to audit?
Yes.
This is the new, okay, so it is part of the whole aggressive approach. Right. And this is the thing. They are looking to assess these penalties because the penalties, what are they?
They're huge.
Yeah.
Failure to file, filing late or incomplete, $10,000 a year. You're going to get notified by the IRS. If after 90 days you've not done anything, then an additional penalty of $10,000 will occur. Each member of a group of corporations filing a consolidated information return is separate reporting corporation subject to a separate $10,000 penalty for which each member would be liable. So that's sort of a big deal. I mean, they could swoop in and hit, different members to get more penalties.
And it also could be a situation where there's actually no tax due.
Oh, yeah.
The U.S. corporation could actually have no income, maybe even a loss. Yet the fact that you didn't file this technical form, that really doesn't have much information that helps the IRS because it's really not a tax return.
No.
It's an informational return. Your tax return is different, separate. This has to be included on your tax return. Your tax return is what creates the number showing you your tax you're due. This doesn't do any of it. This just shows more transactional things and equity interest. It doesn't really have to do. They just want to know this information. They want, we're convinced that the IRS has set these traps for people with from overseas because it's a great target to penalize. You don't have to worry about their lobby coming to Congress to you.
Right.
There's no representative for them. And it's a highly technical thing that's so easy to mess up.
Yeah.
So it's a great little hidden thing.
Now, the IRS also can sort of sweep in these, I love these penalties they have for failure to maintain records.
Yes.
So if they demand to see your records of all of this and you don't have them, $10,000 penalty
There
for
you
that.
go. Same thing, right?
Yep.
Well, I don't need to file one. Yes, you do. Show us your records. I don't have my records.
Oh, good.
Penalty, right? There's sort of a catch-22 where that's a little difficult. The other, I think maybe the bigger risk that people might run, the $10,000 a year, no one wants to pay it, but you have some larger corporations where that's not going to be the end of the world. What could be really, really expensive and could be the bigger issue is that an unfiled 5472 keeps the return to which it relates to, whether that's an 1120 or 1120F, No, I don't think it couldn't relate to an 1120F, but it could relate to some type of 1120 or a 1040 NR. That will keep that underlying return open forever, so that you could, that usually the 3 or 6 year rule applies. Generally, a 3-year applies for audit, but you could have a whole host of years open to audit and taxes. And the really bad thing about when your old years are taxed, not only your tax, but that interest goes back in time and starts accumulating from there. So it doesn't take, and we did some calculations of some interest debts and what things can happen, how crazy it can get. You can start with, I think our example is we found the threshold for having your passport revoked is $50,000. And I think we've discovered that, was it a $12,000 debt in 1996 would now be over that threshold. So people, it runs up really quick, and then there's penalties on that as well. So that is huge.
Yeah. Now there are procedures we can use to file the returns after the due date to avoid the penalties.
That's
so
right.
it can be done. Now let's talk about the changes. This change came about December 19th, 2016. Shall I read it to you?
Yes, read the change.
Let's see if we can make sense of
this.
this.
No, don't read it. I'm looking at it now. Whoa, don't read it. That's way too much. Or do you have? Are you really going to read it?
Let me sum up. They've issued final regulations. Okay, they've issued final regulations that treat domestic disregarded entities wholly owned, directly or indirectly, by foreign persons as domestic corporations solely for purposes of making them subject to the reporting requirements that apply to a 25% foreign-owned domestic corporation.
Okay.
What does that mean?
So this is really what the story is.
Okay.
Because the foreign corporation reporting that's not going to be the massive surprise that people have. This is going to be the wild surprise that most people don't know. If you're a foreign investor in U.S. property, there's a good chance that you own that property through an LLC. Okay, and that would be my recommendation too. You're a foreign person; you don't want to own it personally in your name because you would be a target for lawsuits. You want to keep it in an LLC for that limited liability protection. Okay. Well, the IRS is also convinced itself that this is used for tax non-compliance. I don't know where they get that from, but they're convinced themselves that people are using these LLCs to hide the true ownership of who owns what. Okay. So that's, I think, and we've talked about that, some of the programs that the IRS has tried to come out with to discover the true owners. Well, what happens is that LLC is not a corporation. It's a limited liability company. It's not a corporation at all, any sort of way. Yet, the IRS is going to classify an LLC as a corporation for the 5472. So what that means is everybody now who owns all this property throughout the U.S. Via an LLC has a 5472 requirement that they probably have no idea.
No, because we do this every day. Every day we are scouring the irs.gov for updates. We get email alerts that of changes, and we just figured this out.
Right, and the tax, and if you have a 1040 NR, it's going to be due April 15th. These final regs were passed on December 16th. So you only had a few. I mean, in each year we have so much we're trying to get on top of. That this also almost made it till April 15th until we discovered it. So it is something that has to be done, and it has to be done correctly. Now, the other issue is that, well, somebody might say, well, here, you know what, I'll just own the property myself, or I'll probably, or own it either way. If you own it in an LLC or you own it yourself, if you own it yourself, you don't have a 5472. You have a problem, though, that you don't have any limited liability. You could be sued personally, so that's a bad idea. We want you to have the LLC. But the LLC makes you have 5472 obligation. You're right. And there's one more thing that you have to look out for. And we did talk about this in great detail last year. The estate tax for non-U.S. persons. The IRS has identified this as a big issue. But if you die and you have property like this, it's subject to an estate tax of 30%. And the IRS has said, we're not doing a good job getting this money. And I think this might be the reason why this reporting requirement is now required, because they want to start auditing people, and they're going to start. They're going to start looking at people, okay, who has died, who is passing on this real estate. So this really helps them greatly figure out where an estate tax might be due. And it's different than, and it's a completely different animal than the gift and estate tax U.S. persons are subject to. It has different standards. Now, there are ways to avoid. There are ways to handle everything correctly. Get your limited liability, file your 5472 correctly, and also correctly avoid that estate tax. And the structure for that is a little bit more to it. There's a little bit something, but that is something we help people out with all the time.
Yep. And I'm just trying to think of it now from a non-U.S. person's perspective. How frustrating, because if you're a non-U.S. person, you're most likely going to hire someone in your country and now expect them to be familiar with all these stupid U.S. regulations. It just seems like it's the IRS setting people up for failure.
Or if you are investing if you're a Chinese person investing in property, you're going to invest in where most Chinese investors are investing. Los Angeles, Miami, New York. And you're probably going to use the same network of people that just like, oh yeah, you have to get an LLC. Yeah, you have to do this. Well, no one's telling you, oh, by the way, here's the two things you need to worry about, the 5472 and the estate tax. So that's really where we hope the word can be spread.
We shall try to
spread the word. We will spread the word.
If you are concerned that maybe you have a filing requirement you're not sure about, don't hesitate to contact us. We can certainly help. It's info@irsmedic.com, or you can call us at 888-727-8796. You can also Skype right in now. Yeah, but definitely we can help you out. Make sure you like and comment below and subscribe to our channel for more awesome tax updates. Thanks for watching.